Hello, and welcome to the November market update from Commonwealth Financial Network. My name is Brad McMillan. I'm Commonwealth's Chief Investment Officer. As we kind of expected, October was a tricky month, but fortunately we also got some treats as well. Let's start out with the tricks. It was a tough month for markets. All of the U.S. indices were down from just under 1% to just over 2%. Not a terrible month, and certainly not as bad as it might have been, but nonetheless kind of tricky. The developed international markets were also down about over 2%, which again reflects the same kind of combination of tricks that we had here. But fortunately, emerging markets actually appreciated a bit for the month, which was one of the treats because there is an area where we've seen some significant risk, and there is an area where perhaps that risk may have passed. So let's start with the tricks. One of the trickiest things we've had to deal with in this past month is uncertainty. Why are things uncertain? Well, first of all, we have the pending election. This was already one of the strangest, most contentious elections we've ever seen, and it only got worse through October. This is rattling businesses, it's rattling consumers, it's making people hold back. Second of all, we're uncertain about when the Fed is going to raise rates, or even if they will at all. This is weighing on markets as well. And finally, around the world, we continue to see risk. We continue to see uncertainty. But as I said, we had some treats as well. Because in the face of all the uncertainty that we've been facing, we see rising consumer confidence here in the U.S. We see rising business confidence here in the U.S. And as a particular treat, at the end of the month, we saw that economic growth came in just about twice what we saw last quarter. In other words, the slowdown that we saw over the first half of the year, and that's generated a lot of the uncertainty that we've seen and that has indeed pulled things back, may be starting to pass. We actually see good news. We see job growth continuing strongly. We see businesses and consumers feeling good and continuing to spend. That to me says that the fundamentals remain strong. We're even seeing improving fundamentals around the world, which again should continue to help to reduce uncertainty. Now, we're not out of the woods yet. First of all, we have the election coming up, and that is something that could indeed result in more uncertainty. But one way or another, in next January, we will be inaugurating a new president. So we know that that uncertainty is passing, and personally, I expect things to get much better after the election. Second of all, we see the Fed. We should get some hints this week whether in fact they raise rates. And that will also help not only to reduce uncertainty, but also to help ratify the fact that the economy is continuing to recover and that growth is continuing. Hopefully we're through the trickiest part of the quarter. Perhaps not, we will see. But we know this as we move forward. First of all, we know that fundamentals remain solid. Second of all, we know that the headwinds that have been holding us back are in large part starting to clear. No one knows what's going to happen next, but right now, it appears that we might be in pretty good shape when we talk next month. Thank you very much for listening.